You're kind of doing things backwards, though. You're starting out as a VC and then becoming a startup person.
It's not the usual path, that's for sure.
Tell me a little bit, because you were the youngest partner at Menlo when you joined back in, when was that?
2002.
2002. So how did you arrive at Menlo? You hadn't been doing startups before.
I had not. So I grew up in Chicagoland area. I was studied as an electrical engineer, and I actually really loved technology. So I was a programmer, and I loved being a programmer. I worked at Motorola, I worked at Sprint, Carrier, worked for a startup in Chicago as a developer. And then when I applied for business school out here, I wrote in my entrance essay that I wanted to be a very business savvy chief technology officer. And then unfortunately, or fortunately, ended up in the venture industry. So it's kind of an interesting path in.
Tell me about the areas that you're investing in. What are your specialties?
So the firm, Menlo, has been around for 37 years. We do seed through growth stage capital, enterprise, and consumer. I personally am more of a consumer guy, so a lot in digital media, mobile apps, pretty much anything that transforms people's lives on a daily basis is what I focus on, but we do a lot of infrastructure and other things as well.
This year, I've been hearing a lot about enterprise and a lot about health tech, but you're in consumer. How has that affected what you do? I mean, are you finding a lot of good consumer companies to talk to invest in?
There's a lot of ideas, and what's I think really interesting about the consumer markets these days is you have nothing, and then the way the platforms work, right? You get into the App Store, you get into the top 25, you get going viral on Twitter or Facebook or something. These things can grow really quickly. So I think the hard part in consumer is trying to find something that's really compelling before it gets into the sky-high valuation range. So it's been an interesting path, but there's tons of really cool ideas. I think we're seeing them every day.
Do you think because of the shift towards enterprise that you're finding better valuations for the consumer type companies?
Like I said, it's kind of the dichotomy. After it starts its growth trajectory, its valuations are pretty insane, and beforehand, like, they're very reasonable, but it's very risky. So it's a tricky one. I think there's always good opportunities in both areas, and I'd say generally speaking, I'm a big believer that creating great companies, it's an entrepreneurship shortage. It's not a market shortage. Like, somebody could revolutionize the way logistics happen for setting up these events. Like, if an entrepreneur that was talented, like, really wanted to focus on that, and it could become awesome. So I feel like the world is full of these problems that could be solved if people had kind of the talent and the focus. Alex just started a company as well. I see him in the front row. And it's really hard to find a set of people who are willing to really commit themselves to one of these new ideas, get the capital, get the different pieces lined up to be successful, and then figure it out in time based on how much money they raise.
When we spoke earlier, you mentioned something about how you guys are kind of talking about the right now economy. Can you explain to me what that is?
Yeah, that's a big investment theme of ours. So I think a lot of really compelling opportunities come when technologies converge. And in this case, we say, mobile, big data, social, and cloud. Like, those four forces come together into this infrastructure that allows you to essentially satiate demand in the moment at which it happens in the consumer's mind. So Uber, where I'm a board observer, is a good example of that. Like, before, you think of, well, what was it like to prearrange a ride? I either had to go to the corner and wave my hand, or I had to call up a limo company and say, yep, when can you be here? Here's my credit card number, prearrange it. And now, quite literally, the startup's office is in Soma at the corner of Bryant and 3rd. We're on the 2nd floor. So I pull out Uber, I hit order, and by the time I walk down a flight of stairs and get to the the street, most times the car is there. My credit card is on file. I get in, I get out, and I say thank you very much. And so you say, what are the pieces that had to be chained together in order to do this? Well, I needed to have a smartphone. David's showing off the Uber app. Had to have a smartphone. I had to have a really seamless install from the App Store onto the smartphone to find out about new things. There was many years where it was hard to get apps on phones. GPS enabled, like cloud service for Uber to kind of spin up and satiate millions of people who want it. So all of those factors had to converge into what now just looks like magic. It transforms the way in which you interact with a basic service, and I believe the best companies are those that take existing behavior and then make it like way better. So once you use it, I heard about Uber and I was like, oh, that's a cool idea. And then I tried it and I was like, whoa, like it was perfect. It just they could not make it better. And once you find a service like that, or you start to use something like I'm a Mac user now, I think I can't touch a PC anymore because I use the finger gestures like for swiping between windows and scrolling. And like once your brain gets conditioned to those types of things, like it's intolerable to go back. And so we're always looking for companies like that replace existing habits and make it like so much better that you can't imagine going back. And you see that in the metrics, right? Especially for consumer deals, we look a lot at the metrics, and you see that in retention. Like people try it, and then they don't leave. Mm-hmm. And those are very powerful forces of nature.
You were involved early on with Uber, right?
We led the B round. So
the B round.
Benchmark, who's a co-investor, did the A round. And there was obviously a bunch of angels involved, but we led the B round.
And was it pretty much the same business as it is now? How has it evolved?
It's expanded. So clearly cities, I think they were in like maybe 4 cities when we invested. And they just had the black cars. So now they have the UberX, which is like the peer-to-peer service. They've got the SUVs. They have the mariachi bands. They have the ice cream trucks. I don't know if people tried those. And then they're in like over 50 cities now. So clearly scaled out dramatically. Mm-hmm.
Are you involved in any others in the sharing economy that Uber plays in?
We are. GetAround is one. I'd say like it's where exactly do you draw the lines is unclear. But basically, anytime you get higher utilization out of people and resources, we've got some in the talent space. Group talent is another. So it's a big theme of ours. We think it's a good one to grow.
It seems with some of the sharing economy companies that they tend to get ahead of where the regulators think they should be.
Yes.
And how do you deal with that? I mean, what?
I'm a big believer in the invisible hand. Like, if there's a more efficient way of things to do, especially something like Uber, where the consumer likes it and the supplier likes it, like the drivers like it, and so if regulators stand in the way of that, there was this fight in D.C. at some point. And Paul Graham had probably my favorite tweet on the subject, but basically said, the harder you fight as a government against Uber, the more corrupt you are, which is pretty accurate, right? Like, when there's a market and it's a market that's healthy for both sides, it's the government's job to stay out of the way, not to intervene. So I think it's unfortunate when it happens, and it's just a matter of time before people get voted out of office or whatever to have those things happen.
So you kind of force the issue by taking advantage of the opportunity.
Yeah. It's. I think it's interesting though, especially there's some things like externalities like safety. So if something, both sides are engaging in a marketplace and they're not safe. So Uber is not to talk too much about them, but they insist that drivers are insured and very tight regulations for who can become a driver and things of that sort. But let's just say there was a P2P car marketplace and people could be picking up people and then, not dropping them off at the destination, like taking their wallet. So I think there's a role for that, public safety by government. But generally speaking, if companies are behaving well and being good corporate citizens, they should be left alone.
Are there others in your portfolio, that fit into that right now economy?
So Get Around is probably another one that's very much in that. They do car rental, peer-to-peer car rental. So you enable your car. If you only use it, you live in the city, you only use it one day a week on the weekends or something. You put it into the pool. Anybody else who wants to rent a car, like a zip car for the day, does that. Group Talent is another in the talent marketplace. So, and I think this is a really interesting trend. Is you have a day job, and you have an entrepreneurial itch, and what if you could work at night 20 hours a week and start to engage in a really cool company that's risky, and you need the bills to be paid. So they are exploiting some of that. And I think that's really interesting. I mean, I know a lot of good friends who are super smart, but have families and mortgages and would love to spend 20 hours of their free time a week living the startup dream. I mean, I unfortunately had to go up to 80 hours a week.
I was going to say, day job with the entrepreneurial itch sounds like you.
Yeah, it was. It hasn't been easy. I've slept in a closet at work many nights, but it's a dream that I had, and we saw a big opportunity.
Mm-hmm. Tell me more about Handle, about that opportunity.
So Handle, we just a little bit about the company. We're trying to revolutionize enterprise email. And the firm, Menlo, we try to be pretty thesis-oriented in our approach to investing. I looked for a solution to email overload for about 5 years on the investment side. And the observation was, hey, here I am. I'm a pretty hardworking, reasonably smart guy, and I go home every night, and I look at my family, and I have an itch to grab my cell phone and check what email came in, and I'm stressed out. I didn't feel like I got everything done that day. And what's wrong with that picture? We live in this society where we're more capable than ever. We've got better tools than ever. You have access to more resources than ever. But basic quality of life is being compromised. And I feel like for the majority of the world now, there's 900 million knowledge workers who spend 20 hours a week in email. It's a mess. But it's not really email. I mean, email is a manifestation, but it's just asynchronous messaging between humans. I want something. If Alex stopped checking his email tomorrow and I need to get to Alex, I'd call him. I'd leave him a text. I'd walk into his office and knock on the door and be like, hey, I need something from you. So what email has done is just made it so easy. I can pick something out of my pocket and within a second get something on my mind to someone else, somewhere else on the planet, and be confident they're going to check that. So that's amazing capability. And what it's done in the current economy is you just have more things coming in than you can possibly deal with. There's just more opportunity, more cool things to read about, more things to learn. I still want to pick up iOS programming. There's just favors I could do for this person, introductions I could make, great ideas from people, entrepreneurs, right? I'd love to have coffee with that person. So the number of inputs that you have overwhelm the number of minutes that you have in a day, capacity to deal with them. And so you need a tool. And that's what Handle is. We called it a priority engine. I think in the kind of release, we've been working on our big mobile cross-platform release, which is going to be coming out early next year. It's going to squarely be in kind of the enterprise email productivity. So we really combine email and task management and a bunch of intelligence to make sure you know exactly kind of what you need to do when you need to do it, and you're not just sorting through piles of junk every day to figure out what's the next most important thing you should do.
So will your customers be consumers, or will they be businesses?
Everyone in this room should be a customer. I mean, literally, if you deal with a lot of people, if you ever go home at the end of the day and feel like, boy, I wish I got more done, or I wish I worked on the right things, that's actually the hardest thing to do. There's a book, we read a lot of productivity books and productivity methodologies at Handle, and one of them that's kind of cute is called Eat That Frog, and it's about how to stop procrastination. But the author had a really articulate quote for the problem, which is, if you are not working on your number one most important thing, it is a relative waste of time. And that's a pretty easy thing to argue for, but how much of your day do you think you spend focused on that number one most important thing? Like, it's really hard to do that. And you say, okay, the 20 hours you spend in your inbox, how much of that 20 hours in a week is the number one most important thing? Like, probably not very much.
So how did that conversation go when you were saying, I've got this itch, I want to go start this company?
I pitched, like you guys in the audience, and put together my deck, went to my partners, I'm like, this is a great idea, we got to fund this. And the idea, I was on the board of Siri at the time, was, hey, what if Siri was in your inbox? And you just could very efficiently express your intent about every message you saw, archive, delete, unsubscribe. I want to do that on Friday from home. Like, if you could just say that and the system could capture that intent, that would be pretty awesome. So I pitched, and they said no. Go back to work. So I was like, damn. So even it doesn't help. It was maybe even harder for me to convince them, because it was not only like the cost of capital, but opportunity cost of my bandwidth. So I said, fine, give me $25K of seed fund budget to go get a prototype together. I couldn't pluck from a portfolio, right? I know a lot of people, but that would be poaching. So I found a product manager in China, and I affectionately referred to him and his team as Team China, but he had a bunch of programmers underneath him that didn't speak English, and he charged a reasonable rate, for a bunch of like less expensive people for him. So he made good money. I got a prototype done on 25 grand, went back and pitched, and this time I got the thumbs up. And then I had to have the hard conversation with my wife about sleeping in the closet in San Francisco 2 nights a week. We've got 3 kids that I love. So she was supportive, thankfully, and 2 years later, we've got a real company, and it's been a fun run. Like,
So 2 years, I mean, how have you balanced the Menlo responsibilities with the startup responsibilities? They're both pretty heavy.
It's hard, to be very honest. Like, again, like, I think the constraint is time. Okay, I have an hour. What's the best use of that hour? And if I put an hour towards Handle gets better. If I put an hour towards Menlo gets better. So it's all about dealing with that finite resource, which is my own time, getting better at delegation. The product obviously is intended for this purpose. So doing it, using the product, I use it every single day, most of my day. So it's helped inform product decisions, using it and balancing it and figuring out like where's it working, where it's not. Our company uses it. So that's helped, but honestly, it's hard, and it's like you got to hire great people at the company, at the firm. Like, make sure that the people that are involved in all the things are awesome, because then they manage themselves better. So a lot on like kind of team building, a lot. Like, I've got obviously great partners at Menlo, so we hired a new partner, Venki Ganesan, who I know who's added a ton to the firm, and so like just adding more capacity in other areas. And then I try really hard to service the boards I'm on with A+ service. Obviously, the amount of time I spend deal sourcing has gone down a lot, but I have a reasonably interesting story to entrepreneurs of, hey, I can empathize with you. So high quality deal flow still comes in.
So you're still doing some deal sourcing?
Some, yeah. I've done, in the current fund, I've led 2 main fund investments, probably 5 of seed investments. Handle was actually the very first investment out of Menlo 11, which is our current fund.
So tell me about the ones that you've done since you've been wearing the 2 hats.
Handle was one, and then a company called Scan, which is also in the right now space. Scan is the leading QR code scanner. They've got like 60 million downloads, and their dream and our dream for the company as well is for the QR code to actually do something instead of just pull up a web page. So the main thing I'm excited about is scan to pay. So imagine anytime, anywhere you see a QR code, it's kind of like Uber. Like, you scan it, and it says, "Hey, you want to buy that thing?" You hit yes, and it's done. So I'm imagining like charities Like on the outside of an envelope or a postcard, it could be like, hey, you donated $50 to the Red Cross last year. Will you do that again? You just scan it and you say, yep, and you're done. You throw out. So things like that, things like, street vendors, square without the square. I mean, there's a lot of potential uses for it. But the idea that all of your personal information is stored on your phone, is secure, and then through optical, right, like anything that's printed, your camera sees that and then closes the loop on the internet is a really powerful idea. So that, and then in the seed fund, a number of companies too, so 5.
So you're on the board of Uber. How many other boards are you on?
6 boards.
6 boards. What are the companies?
InView, you're gonna test me now.
Yeah.
So Roku, InView, Playphone, Telenav, UE.
Mm-hmm. And what's your approach to being on the board of a startup? I mean, what do you bring to the board?
It's interesting. Like I'd say, being an entrepreneur has definitely shaped. I used to think I was being helpful, and in some ways that I'm now that I'm on the other side, it's not helpful. Mm-hmm. So
what kinds of ways? I mean, tell me about that.
The biggest one is like execution is really hard. Like it's easy to have, I shouldn't say easy to have ideas. Like really good ideas are hard to come by, but then you have this idea, and then to get it to like actually work at the level of fit, like all the details that are required in that. And I used to think like, oh, it's the idea. So if I come to these board meetings, give ideas, and they're good ideas, like that's, and it's not. It's sort of this constraint. In the case of a person, it's like minutes in a day. In the case of a company, it's like how many high quality individuals do you have in each function? How do they need to coordinate the processes, et cetera? So I think my intervention as a board member is much more focused now on, okay, like what's the one most important thing this company needs to do to transform from where they are to where they need to go? And then how would I see that manifest itself in the business? And then like bird dog that, like just make sure that gets attention, because attention from a board member focuses energy of the company. And you got to be really careful about what you pick. And then, of course, like human capital, talent, like finding awesome people who are enthusiastic about a company's vision and willing to work really hard and dedicate their lives to it, like that's a really scarce resource. So plugging together 2 people who want to work together is, I think, the ultimate win-win. So introductions to partners, introductions to people on the market who are awesome, and be like, no, this guy is awesome, or this gal is awesome. You got to hire this person. Like, just find a spot for him, and then being right about it is obviously helpful.
So, do you feel like you know better what to look for in your own board at this point?
In my own board?
Yeah.
You mean like me reporting out to the board? I know how not to waste their time. Yeah.
So you were an early investor in Siri, is that right?
Yeah.
At what stage was Siri when you got involved?
That was it wasn't incorporated yet when we invested. So it was like a tech spin out from SRI that we helped kind of spin it out.
What was it at that point?
It was so SRI has this program they call Ventures, where they take I think it's the Bayh-Dole Act, but basically the government funds research. SRI gets grants from DARPA and other people. Awesome technologies are created that serve government, and SRI can then go commercialize those and make money off of them. So I think it's a great use of the government dollars, because you get to see themselves. Anyway, they help do that. They had this project called Kalo, which was like a $100 million project, cognitive assistant that learns and organizes. And it was this basket of technologies that was kind of sitting there. And then this fantastic entrepreneur by the name of Dag Kitlis came to be an EIR, and he's a really visionary guy. And when we heard the first pitch, it was called HAL. I don't know if people have seen Space Odyssey, but like this, it was HAL. Ask Hal what time it is, or ask Hal to book a flight.
It starts out friendly, but then doesn't.
Yeah, HAL had certain connotations we didn't want to go mainstream with. So The name changed, but yeah, it was. I think it was like the team, and then Adam Shire was another co-founder. He was actually like the prime engineering contractor, coordinating all this research across different universities. Tom Gruber was the third co-founder, who was like a student of semantic web technologies and natural language processing. So it was just like this, perhaps one of the most incredible technology teams I've ever seen. And then that converged with, I think oftentimes, Ann Winbland made the comment earlier, but like the VC's job is to be a student of the market as well. And sometimes you're thesis oriented, sometimes you're just like, what the hell's going on over there? Like, why is Twitter growing? Or in the case, I'd come across this thing called Smarter Child, which was a AOL instant messaging buddy. And it was kind of like the magic 8-ball of people will I get married this year? And it says like, probability says great, yeah. So it was kind of like that, but with buddies, and it had 17 million people who had buddied this thing, and it was getting like 1 billion questions a month. I thought like, wow, that's like total turkey technology, but there's something to this illusion of speaking to somebody that you say like, there's something interesting there, and how do we exploit it? So that converged into the investment as well. I was like, okay, like this is amazing technology plus this like phenomenon of the personality could be something really special, and obviously it was.
At what point did it acquire a voice?
That was from the beginning.
From the very beginning.
Yeah.
And it wasn't always a female voice though, right?
It was.
It was.
Yeah.
Okay. I guess I didn't think it was for some reason. I guess it was the HAL that threw me.
Yeah, like both men and women prefer to talk to females. So it was a pretty easy decision.
So what was the key point in Siri's progress to get it to be acquired as it was?
Personally, I didn't want it to be acquired. So it wasn't like I had this dream for the company, which was like you think something. It's kind of like the right now, right? You think something, and then you speak it. You speak 160 words a minute. You type on a keyboard 80 words a minute. You type on a touch screen 30 to 40 words a minute. So like, if you could just express that intent and then it was done, like how amazing would that be? And so our dream for it, the founders as well, was wow, like have this thing that you speak to, and it can, anything on the whole web that has an API, it could go accomplish it for you. It can chain together different web services. It can, book stuff for you. It can buy stuff for you. It can remind you of things. Like it's like having an intelligent virtual assistant. So, but then life encounters it, and Apple came and made them an offer they couldn't refuse. And distribution is a difficult thing. That's another comment I've heard today. Like customer acquisition is a difficult thing, and it is. And if you do not have a viral product, and Siri is not super viral, it's like kind of bolt on virality, but it's more just like streamlining your interaction with computing devices. So Apple's distribution plus the amazing technology made a lot of sense, and everybody was happy.
So what do you think of Siri today, as far as what you thought it might become and what it has become?
There's a bunch of different answers to that. Like,
okay.
I still, when I speak to Siri, Siri listens to me. So a lot of people like complain, oh, it doesn't understand me. You actually can't blame Siri for that. You blame Nuance, who makes the voice engine that Apple uses. So that's not Siri's fault. Siri would be like, once the words are determined from the voice print, what does it do for you? And I think Apple very astutely diverged from that Siri roadmap and made the phone more usable, right? So I can enter stuff in my calendar, I can send text messages, I can look up contacts. So the decisions they made with the technologies were the right ones for the business, the iPhone 4S. This was actually interesting. I forecasted that when Apple started selling the iPhone, their market cap would go up $10 billion, and they did. It was like, when we were contemplating selling the company, I said, like, this thing's worth $10 billion. So it went up, the day they started shipping the iPhone 4S, the market went up $10 billion because it was such a compelling feature. So it was wise choices they made in the use of the technology. It's different than what the original vision was, which means there's an opportunity for a new company to do that. So I consider it good news.
Uber is one of the companies that you hear a lot talked about with the wave of billion-dollar startups that are out there now. What do you think is driving that, and what do you think the result will be of having so many companies with that kind of valuation before they hit an exit?
So you mean in like pre-public
Yeah.
billion-dollar companies?
Pre-public.
I think it's there's a number of things that I think have led to that. One is just the capital markets are pretty efficient. So you have firms who very specifically focus on, they get these big pools of money and they put them into late stage companies and they get a lot of the value. So Facebook, when it went public, had a $50 billion valuation, I think it was around. And now it's 100 billion. So you say, well, before you used to go public, and maybe when you went public, a long time ago, you went public and it had a $500 million market cap or $1 billion market cap. It went public at $50 billion. So all of that value that was normally used to be captured by public market investors, and people be like, "Ooh, yeah, I'm going to get into this hot IPO and like hold on to it for 10 years and ride it up." That used to go to public market investors, and smart limited partners and smart investors. There's a lot of good late stage firms out there said, "Hey, why don't we get there earlier and give them an option to not go public, right? So we can even give them liquidity." You see some of these deals like TCV structures. They start buying out stock from employees earlier on. They start, giving existing investors, early investors, liquidity, gobbling up a bunch of the stock, and then they can hold it. When they do the investment, it's a relatively safe bet, right? Because the company's going to be something big. It's already established its metrics. So I think it's a commentary on the capital ecosystem. It's a commentary on how expensive it is to be public. Sarbanes-Oxley compliance is still an issue. A lot of overhead having to, meet your quarterly numbers, not necessarily take long, expensive bets that you would want to as an entrepreneur, because you just can't say, "Oh yeah, sorry guys, we're going to go unprofitable for a year, but leave our stock price where it is." That doesn't work that way, especially with the amount of hedge funds in the public markets now. You'll get nailed. Because they'll trade out of your stock and short you, and you're kind of holding the bag until you turn your numbers around. So it's hard to be a public company. And I'm on the board of two public companies, Telenav and Yumi, and both are great companies, fantastic teams, and building really solid value, but have been they're not trading at 20 times sales because they're not necessarily doing everything exactly the way the market wants, growing 100% like this quarter. Mm-hmm. They're kind of doing long-term bets for the long run, and it's a good buying opportunity for value-oriented people who want to hold stocks and companies they believe in. But in terms of being public, it's not that fun sometimes.
Mm-hmm. Yeah, one of the conversations that comes up with the billion-dollar valuations and the number of companies at that level is whether or not there's a bubble going on. Why is this not signs of a bubble?
The companies that get a billion-dollar valuation have very proven metrics. So I don't know how many, there's a lot of metrics tools out there, Mixpanel, whatever else, but I look at metrics in companies as data sets, right? So if you see patterns in numbers like global warming, right? Okay, you can look at CO2 concentration, okay, there's a pattern here, and I took a sample here, and I took a sample there, and I took a sample down the South Pole and North Pole, and I see all these data, and it's this is a trend that's happening, and it's kind of like what happens with a consumer company. Okay, if you see those are 50% retention rate, everybody who installs this is still there 2 months later. 50% of those people, and they open the app 10 times a day, and it's growing this fast because people are telling each other it's almost impossible to stop those companies because the black box that they have created is like, look at a Dropbox. Okay, it's viral. They got this beautiful freemium model, and it's a valuable service. Like, people are putting their data in there, sharing it out. So it's like, okay, here's this force of nature, and you can look at all the data and be like, okay, like, how many people are going to want storage in the cloud in the next 10 years? It's big. Like, this is a good company. And Uber's like that, Airbnb, especially these marketplace businesses where it's not even about the technology, it's about the liquidity in the marketplace, or these data companies like Facebook, LinkedIn, Twitter, where it's not about the feature set. It's now, like, think of Twitter. It's, okay, there's a new tweet that lands like every few milliseconds or nanoseconds or whatever it is now. Like, okay, how do you ever replicate that data source? And that data source is what's most valuable. So in many cases, the billion-dollar valuations, I think, are well-deserved and actually very hard fought for who gets to invest in those companies at that valuation.
Mm-hmm. Are there any other signs of frothiness out there that you're seeing?
I think there's definitely areas that are fully valued. Like, I think some of the public market comps for the SaaS companies, like 20 times sales, like, they're just very high compared to historical bases. So even though they're good and they're growing fast, like, are they really worth that right now? That's a question. I mean, a lot of these things, okay, it's going to keep growing, but if the market goes out of favor in a certain sector and then it trades down 50%, you're just going to hold it for a long time. You know, Facebook it was a buy at the IPO in the long run. It was not a buy at the IPO in the short run. So I was a believer, like, hey, I'm going to buy this for my personal portfolio because I'm not going to sell it. I've got kids going to college in 10 years, and I'll use that to help pay for that. But I think you got to be careful on values if you have an exit horizon that's finite, and you're not going to hold it for 10 years.
Mm-hmm. Had a question and I forgot it. Happens sometimes. Tell me about the lean startup movement that you were involved in. When did that get on your radar screen? What attracted you to it?
So the lean startup movement, for people who are unfamiliar, Steve Blank and Eric Ries are like two of my favorite people in the world, and we're the fathers of it. Steve Blank I actually met in the summer of 2001 in the Yosemite High Sierra camps, which is this highly recommended, this chain of tents, like tent camping, where you hike like 10 miles between these things. Anyway, so Steve rolled up on a mule with his two daughters and was sketching these circles in the dirt. The customer discovery process, he called it at the time, or market discovery process. So odd set of circumstances under which I met Steve, but he later introduced me to InView. I joined the board. Eric Ries was the CTO of InView. And then it's like, I have these ideas he wrote an amazing book. So, like, read it again, like, read it every year that you have it, because I still know it and I still make mistakes. And my number one biggest mistake that I think it's very easy to abuse, oh yeah, I'm VP, we're lean, we do this. Like, I just hear it constantly now. But it's very hard to keep yourself intellectually honest with hypothesis formation and like mission statement. So you have to decide what problem you're going to solve first, because if you just, okay, we're going to launch an MVP and see where traction is, like, traction might be in the wrong place. So I think of Handle, I could have launched Handle as like a weed whacker, like, let's clear out all the junk. And I think a lot of people would have used that. It didn't solve the core problem, which was I really wanted people to spend their lives on the important things. And that's like a very specific mission statement, and it manifests itself in very specific ways. So you have to be very clear and like literally write it down and subject it to the test, like, on your desk every day. Everything I'm doing, is it aligning with this mission statement? So doing that. and then coming up with the hypothesis formation of what's the key risk in the business and writing down the hypotheses. So for us, it's a retention hypothesis right now is here's this habit that a lot of people have 20 hours a week. If they don't replace their current email habit with Handle, we lost. So getting to the point where, no, the 2-week retention is where we want it to be, like it's just a lot of hard work. We've had to do all this crap stuff like email parity features and labeling and contact import and all this stuff because like if you don't have that feature, you can't use it as an email client. So having those written down, stated, having the team all buying into them is, I think, a really critical aspect to not losing your focus and like diverging off mission. So long answer to the lean startup, but I could not believe more in the fundamental principles that it teaches, and the more you can like soak in it, read Steve's blog, read Eric's blog, talk to other entrepreneurs, like test your hypotheses verbally. Does this seem like the right hypothesis? So much stuff you can test like for close to $0. Run an ad for a product you don't have and see if people click on the ad. You can, like we're doing tests right now, $25 Facebook campaigns, testing taglines, copy, images, and like if you test it and like nobody's clicking on the ad, then don't build that thing. Like that could take many engineers, many months to do. And then if you can't sell it, it's useless. So like just figure out really what is the thing I have to prove like first, and then okay, now what's the cheapest way I can possibly validate that proof? And like you have to write it down. You can't have it in your head. You got to write it down and like put it in a spreadsheet, put together the assumptions and like multiply them out, like capture all that stuff and then like test it rigorously the same way you would test things using the scientific method.
And all that came from a chance meeting with a guy on a mule.
That's right.
Amazing.
Opportunities everywhere. People, you guys are all in the right place.
We've been talking for a while. Do you want to see if people have some questions they want to ask us?
Absolutely.
Is there anybody here who wants to ask a question?
Oh, yeah.
One over here.
Hi, I'm actually curious why you focused your startup on email and whether you have any plans to capture instant messaging and other forms of communication, because more and more of our communication is happening outside of email.
So that is a good hypothesis, and the market is speaking and saying the opposite. So email usage continues to grow. And if you look at Yammer, Chatter, Facebook sends 10 billion emails a day. So like, yes, things are happening elsewhere, but the honeypot of attention is the inbox. And people use it as a to-do list. People use it as a news digest. People use it as a workflow. Like if you want to get to somebody, if you know their text messaging number, that's probably your best channel. And the second best is email. So I'd say like this is focus. Like I got a small company. I do not have enough programmers. I do not have, we're like 10 people right now. So you have to be laser focused. And as tempting as it is for me to start like going after IM and SMS and Google Voice, voicemail, like get all that stuff in the priority engine, we haven't solved email yet. And we're going to keep beating our heads against the wall until we get people to retain. Like my goal right now is 20% 2-week retention. Until we can get an email client in people's hands that people are there 2 weeks later at 20% rate, like, sorry, we got to keep doing that. And maintaining that focus is actually a really, really hard thing to do. It's very tempting. I wake up in the morning with like this great idea. Oh, we need to plug in Evernote. Like, no. Go to email labeling because there's a lot of people who will not use an email client until it's got labeling. So it's painful, but you got to do it.
Any other questions from the audience?
My dream is very big. The 10-year vision is, I call it an operating system for humans. So if you looked at your phone, think of like GPS for your day. You looked at your phone and it's like, hey, Shawn, in the next 15 minutes, you should write this email to this person. And that is your highest value creation for the next incremental 15 minutes of your day. Like imagine a day where a tool can guide you to always just be doing the right thing, and you're not looking through this pile of junk, getting distracted. Oh, there's this LinkedIn. Oh, shoot, here's 3 articles I can read on LinkedIn, because they're really good at surfacing articles now that are interesting, but oftentimes it's not your most valuable thing. So I think it's really important for companies to have a vision that's compelling to you and something you want to spend your life on, but then figure out what's the first thing I can do to prove that this is valuable in the world, and then don't leave that until you prove it to yourself.
Any more questions?
Actually, I had 2 questions. For your OS for humans, for this handle thing, is it sort of like a intuitive smart calendar that takes your whole life into consideration on a day by day and allows you to be able to manage it so that you're doing the right thing to go where you want to go? Is that what you were thinking?
So you say, what does an operating system do for a computer? You have this finite resource, which is a CPU, and then you have a network, Ethernet cable, Wi-Fi, and then you have 100 apps running, all contending for that CPU, and that's how I think of your brain. It's you don't multitask. That's an illusion. Anybody who thinks you're a multitasker, you don't. At least on knowledge stuff, maybe you can listen to music. But if you are processing information and adding value to it, you can do one thing at a time. So you can context switch between those, but you have to focus on one thing at a time to actually add value. So I think of it as that, how do you automate as much as possible so that things what need to get done more quickly. So there's an automation step, and then the scheduling step is everything contending for your future self. How do you just make smart decisions so that you don't, if there's this really important report due on Friday, and if you actually got it done, a rough draft done by Wednesday to share for feedback, it'd be a much better report. And you're sitting there reading LinkedIn articles. That's a bad use of your time at the time. I do that every day. The product does not yet work the way we want it to. It'll be so easy to make those decisions at some point that you'll just kind of automatically do the right thing. You'll go home feeling great. You'll get kind of a gamification feedback wow, you had this great day today, David. So that's the dream.
Cool. Yeah, one more question. So on the valuation question you asked before, so let's say, Shawn, it's your fund. You have $1 billion or $500 million, and you can participate in this round of Snapchat, whatever valuation that was, or Pinterest, or Flipboard. Companies that don't have huge revenues, but they're having billion-dollar valuations. Is that overpriced in this particular cycle, or is it just the beginning of us rethinking a valuation issue? Because you got Facebook at $50 billion. And so forth. So I guess people are worried or nervous about, are we investing into a bubble? But the other question would be, it's not a bubble, it's actually reality. It's a different reality right now.
So the question,
would you invest in a Snapchat at these valuations, or a Pinterest, or a Flipboard? Are they too overvalued in your mind?
So a lot of it depends on the flavor of the equity you're getting. So what you're seeing a lot of these late stage rounds get done at is a participating preferred stock. So you basically say, let's say Pinterest at $3.5 billion valuation, but they've only raised $100 million. Well, the company's worth more than $100 million, no matter what, right? That you can look at the usage and see the amount of attention that they're getting is staggering. So I can put my money in and be the first money to come out, and then participate in some of the upside. So it doesn't have to be valued at $3.5 billion for me to make money. And if it becomes a Facebook, then I'll still make good money. I don't think, you look at David Z when he did Facebook, I think they did it a 400. That was, oh my God, that's a crazy price. How could you do it at that price? But look at, and I didn't hear Zuckerberg's pitch. I went on when it was just stanford.edu. I used my alumni address, and I saw a bunch of people talking about parties. I was like, well, this doesn't look like a very big money maker, but maybe if I had heard Zuckerberg speak of his vision you would come up with this, okay, this is what this could become. So you reserve the option, right? So I think it's a combination of, is it worth it? Do you see that path in the future of it becoming that type of like pillar of the internet? And then two, do you have a vehicle that protects the capital you're putting in and leaves an option for upside?
Anyone else?
Hey, Bill?
Hi, Bill Reichert with Garage. I'm curious, most of the people in the audience I think are entrepreneurs. And one of the huge phenomena we've seen is just this explosion of entrepreneurship globally, right? We've got all these entrepreneurs all over the planet, and they tend to flow through Silicon Valley. And, everybody gets some funding, but there's a real bottleneck, right? In, sort of going up the food chain. And in spite of how cheap it is to start a company, it's really expensive to build a successful company for the most part, right?
Yeah,
I mean,
I agree.
Pinterest only raised $100 million, right? How do you think it's going to sort out? What's your advice to entrepreneurs in terms of it's so much more competitive and there's so few of you, Menlos, right? Big funds that can write big checks, that can do big syndicates. What's your advice to entrepreneurs on how do I think about this horrifically competitive path ahead of me for, raising serious money?
So there's the, in the lean startup terms, it's like there's pre and post product market fit are the two phases. So in the pre-product market fit stage, like I have this idea and I'm working on it and like the dogs aren't eating the dog food yet. And then the post-product market fit is it's growing and like, hey, I just need expansion capital to grow it. I think there's a lot of VCs walking around with a lot of money who would love to invest in expansion stage deals that have big markets to address. So I think that's not the constraint. I think the hard part is to get capital that you need to iterate enough. I mean, to get talent, right? Like iOS programmers are really hard to get. Good product people are really hard to get. Designers, I think for any consumer product, like if you don't have a designer, go find a designer tomorrow. Like I did not appreciate the value of a good interaction designer. Number one job is to get an interaction. So like to have those scarce resources all in the same building and willing to work for you is expensive, or you got to give them a big chunk of your company, and even to find them is hard. So I really think of it at the earlier stages, it's like finding the talent, finding people who you trust their advice is hard, but Steve does a really good job of his, I forget what he calls it, lean launch pad or something, but all these different cities getting startup founders together, startup weekends, using the tools. So the methodologies I think are out there now. If you can get enough money or enough people spending their 20 hours a week extra to get to the point where you're getting to product market fit, like that's where I would focus is don't worry too much about the cash, worry about the hypotheses you need to validate, like the demand or whatever else, or even, like I love, if a consumer product came to me and there's like, I've only shown this to 100 people and all 100 of them use it for 5 hours a week, I'd be like, that's awesome. Like that's something as a venture capitalist you can pour a cash onto and it can grow, but exactly figuring out, there was a gentleman earlier who had an idea for how do you like kind of capture people's hidden intentions. That's a psychology problem. I can't give you an engineer and go build that. Like that's a design, that's a marketing message, that's a first like 15-second sign-up flow. Like all those pieces have to come together for it to work. So just keep working on that. Don't quit your job even. Like I think a lot of that stuff you can do nights and weekends to show that you have something that's resonating with some set of users, and then try and go get capital for it. If you can't afford it, like I'd rather have more time. If you have a hypothesis for a business, but you don't know the answer yet, I'd rather have more time, like 6 months, a year, whatever, to like iterate, than if I got 6 months of personal burn in the bank, and I'm gonna quit, and I'm gonna work on it every minute of every day. to like go figure it out in 6 months. Like sometimes things just take longer to percolate. Now Jeff Bezos didn't do that. But that was a different time where like capital was really easy to come by, and he said, I'm driving my van across the country, and by the time I get to Seattle, like I'm gonna have started the company. So I don't know. These are all personal decisions, but it's sort of figuring out what you need to figure out.
Do we have time for one more question?
Yeah.
Somebody in the back there?
My question is simple. What is your personal view on digital currency right now? Bitcoins, Ripple?
Like, do I think it's going to go to 2,000 from 1,000, or do I think it's here to stay? Like, what's the question?
Would you invest? Are you long on Bitcoin? Are you buying it? Or do you
Am I
invest in
mining
companies? Yeah, for example, mining it.
I'm not I'm not a miner.
Do you invest in companies like that?
So currency is a funny thing, right? Like, pull a dollar bill out of my wallet. It's paper, and it's a $100 bill. It's still paper. So like, it's trust that makes that currency powerful. And Bitcoin at the moment is this currency that, due to encryption and the way in which it's actually, I was just reading up on it this weekend. It's pretty fascinating, like this kind of global record log of all the different currencies trading hands. So you basically, as long as the largest pool of compute power is on the good guys team, right? Like using Bitcoin the way it's supposed to be used, the Bitcoin as a currency can't be taken over. Double spending is like the big issue with currencies, right? I give you $100 and you give me a toaster, and I give you the same $100, and then you give me some bread, and I leave, and you guys are both like left holding the bag because I didn't have $200 to spend. Anyway, that's all figured out provably through encryption and this log. So I think Bitcoin as a viable tool of monetary transfer is probably here to stay. Like, I don't think I would trust the speculation at all, because I mean, I've heard of like ASIC companies. We're going to build an ASIC to like mine Bitcoins, or actually it has to do with like, I won't go into it, read about it. But I think it's kind of like tulip mania. If you feel like I'm just going to buy Bitcoins and then they're going to appreciate in value. It's like I'm going to buy $100 bills and they're going to be worth like $200 next year. Bullshit. Like, it's a trust mechanism for people to transact. So I don't know. I think it depends on how you play it. But there's a lot of ways to move money. I think the whole monetary system is going to undergo some pretty dramatic transformations. It's not sustainable. Like, I have a friend who, moved money between Germany and the US, right, for his parents. And so rather than go to Western Union now, he buys Bitcoins, and then they sell Bitcoins, and he pays $0 transaction fee because they do the same thing. They do the transaction over the course of a day where there's basically no fluctuation risk in Bitcoin because it's trusted. So I think like the financial institutions and transaction fees on top of those are going to trend towards zero because of the emergence of the phenomenon, but I would be very careful on how you play it.
Well, thank you very much.